Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 13th, 2025, and we're diving into the latest earnings report from European Wax Center, the leading franchisor and operator of out-of-home waxing services in the United States. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. European Wax Center has just released their second quarter fiscal year 2025 results, and there's a lot to unpack, from revenue figures to strategic initiatives.
Revenue and profitability overview. Let's start with the revenue figures. European Wax Center reported a total revenue of $55.9 million for the second quarter, which is a 6.6% decrease compared to last year. John, what are your thoughts on this decline?
While the revenue did see a decline, it's important to note that the adjusted net income actually increased by 5.6% to $11.8 million. This indicates that the company is managing its costs effectively, as reflected in the adjusted EBITDA, which rose by 4.7% to $21.6 million. The focus on operational efficiencies is clearly paying off.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 16 cents, but the actual EPS came in at 9. How should investors interpret this discrepancy?
The EPS miss is certainly a point of concern, as it fell short of the forecast by a significant margin. This could be attributed to the increased SG&A expenses and interest expenses that the company faced. However, the increase in adjusted net income suggests that the underlying business remains strong, despite the EPS miss.
Strategic initiatives and future outlook. CEO Chris Morris mentioned that the company is focusing on driving traffic and sales growth, improving profitability for franchisees, and pursuing expansion. How do these strategic priorities align with the current results?
Chris Morris's statement reflects a clear strategic direction. The slight increase in same-store sales by 0.3% and the opening of new centers, despite some closures, indicate that the company is laying a strong foundation for future growth. The leadership team is focused on enhancing franchisee partnerships and improving guest experiences, which are crucial for long-term success.
Market reaction and company response. How has the market reacted to this earnings report, and what has been the company's response?
The market reaction has been mixed, with some volatility in the share price. Investors are weighing the short-term EPS miss against the positive long-term strategic initiatives. The company's response has been to emphasize their confidence in the growth potential and the resilience of their business model, as highlighted by the CEO's comments.
Key takeaways. In summary, European Wax Center's second quarter results show a company in transition, with a focus on strategic growth despite some short-term challenges. The revenue came in at $55.9 million, with an adjusted net income of $11.8 million and adjusted EBITDA of $21.6 million. However, the EPS miss is something to watch. Thank you for joining us, John.
Thank you for having me. It's an interesting time for European Wax Center, and their strategic initiatives will be key to watch moving forward.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on European Wax Center's performance in the comments below.